welcome to Tambarara. My name is Happiness and I'm joined by the newest CEO intern, Taruvinga, CEO of the Securities and Exchange Commission. Welcome, Enimo.
Thanks, Happiness. It's a pleasure to be here.
And congratulations on the new appointment.
Thank you.
We're going to talk about it in detail. Firstly, have you settled in your new job?
Partly. It takes a bit of time to sort of move from private sector to public sector.
Yes.
So I would say I think I'm still settling in. It's my third week perhaps on the job. Still settling in.
Still settling in.
Yeah,
you found a lot of things waiting for you in the in queue?
Definitely. I think top of the list is obviously the developments in the market. And I've taken some time to be meeting stakeholders as well from the market, and that has been sort of taking my first few weeks. Obviously, the sector has got issues across the board. The brokers have got their own issues, the custodians, the exchanges. But yeah, the intro is full.
Well, it's we all feel pity for you that you are joining the market at this particular time. The markets are down.
Yes.
Everyone is sort of demotivated to be able to do something, and there's just need for someone to come up with a solution on how you're going to bring vibe back into the market. So we are here to talk about that vision and your plans, your most immediate plans, especially considering the environment that we're in.
Okay. Thanks for that. I expected that one. I know the market is sort of looking for a savior at this point, and it's not going to be a straw in the park. But I must say there is a general understanding, I think, of the challenges that we're facing, mostly policy-driven, and that gives us a chance that perhaps if it's a matter of policy, I know policies can be changed, there can be motivation to amend certain areas. So what is it that is SEC we are really focusing on? Obviously, there's an element of having to bring the market to some sort of stability. But we must also go back a little bit to say perhaps why was the policy, why has the policy been targeting the market in the first place? So I'm sure the policymakers felt there was an element of ill discipline in our sector. And part of the objectives of the Commission is obviously to ensure that there's market stability, there's market integrity, there's investor confidence. So the first thing is market integrity. I think we have to address that. And there is a combination of policy and regulation. I think as has actually happened, we saw SI 103 being published, which is the regulatory aspect. The policy is probably the tax issues that have then come up. And those were meant to address perhaps behavioral issues in the market. So we have to go back and say if there are behavioral issues in the market, how best can we address that? And if perhaps we've got other means of addressing those behavioral issues, which we think will be sufficient to deal with the things that we allege to be taking place in the market, we can then perhaps go back to the policymakers and say, you know what, this is what you felt the sector was doing, and we think if we deal with it through this way, which is perhaps a regulatory in nature, perhaps let's lighten the policy interventions.
Okay, it's funny that you say that, because now I know you're coming from the private sector, but you are the regulator.
Yes.
Under normal circumstances, these policies are supposed to come from SEC.
Agreed.
How are you going to balance that? Obviously, you see the gaps in the policy.
Yes.
But you are also supposed to be government. You are the
I am
face
government.
of
I am government, and I'm fully cognizant of the policies that have been made through our ministry, obviously. And us as an extension of government, we are supposed to be at the forefront. In fact, we are at the forefront of making sure that the policies are adhered to. So the compliance, as long as it's policy, we will fulfill that. We have to ensure that it's fulfilled, it's compliant. However, our role as well is to advise, the policymakers, so that we strike a balance between, sustainable regulation and also, the market being allowed to also operate efficiently. So We, by saying policy has to be moved, we are not saying government is wrong or something like that. We are saying our role as well is to advise government. So the feeling now, after the policy has been implemented, is that perhaps that fine balance between regulation and policy needs to be found. If you look at other sectors, for example, the banking sector, you find the Reserve Bank, for example, they issue guidelines, they issue directives, which are perhaps not codified into law.
Yes.
And that's an area that we think perhaps us as a sector we should be perhaps moving to. And that then means we have to engage our policymakers to say perhaps let's try to balance certain areas, perhaps we need to issue directives. Why directives? Because perhaps they are easier to then perhaps change, unlike a law which is codified into statute. But like I was saying, to go back to the issue of the market integrity, one of the things that has also been raised is the issue of market surveillance, to perhaps try and address, that gap which the authorities felt was there, that there was no proper oversight in the market. And we think perhaps if we move along on that line, we implement our surveillance systems, and we advise policymakers that we have got a surveillance that is functional, and perhaps the regulators got access to it. I think it can provide some level of comfort to the policymakers that there is oversight which is now in place. So perhaps there can be a lessening of the policy side.
Will that provide a level of comfort to your participants?
I think it will, because surveillance is a norm in all markets that are developed. It's a norm, and I think they would probably affiliate to that aspect more. I think it would, in my view. I think it would. It might not be sufficient. It might not deal with all the issues that we think. It's not an all-encompassing thing, but I think it's a move in the right direction.
Yeah, but at the moment, I think what's happening to the market now, the low confidence, the negative sentiment, is because of increased surveillance. It's because of this increased oversight role where government thinks it's not doing enough to curtail that. So do you think it's in the best interest? Or is it in line with any regional standard or any international standard?
Like I'm saying, it's a mixture of policy and oversight. I don't think we would say we've over-regulated or we have done more on the surveillance at this point in time. Rather, we're actually introducing something that was missing in the market.
Yes.
So I wouldn't really attribute perhaps the decline to over-regulation at this point in time. I would actually say that's best practice. In fact, if we had surveillance, I would think perhaps the policymakers would not have then intervened in the way that the intervention has come now. So it could be a feeling, or it could be an assertion in the market that perhaps there's over-regulation, but I would hasten to say that I actually think we are introducing something that is best practice and something that actually covers us as a market, that because there are certain questions that we asked as a market to say, how are you overseeing these aspects? For example, third-party movement of funds. And we couldn't answer those questions.
Because it wasn't there in the regulation.
But there is annual provisions. It might not have been there directly in our own act, but there is supplementary acts that also govern our sector. The annual provisions actually, and also best practice in other markets, like you're saying, third-party movement of funds is not allowed as best practice, because these are conduits where illicit, financial flows are then take place. So I would say if we had surveillance over those issues of trust accounts, the movement of funds, and probably even the ledgers for our brokers to just determine who is being paid, are they beneficial clients, and so forth. Perhaps this element could not have gotten to where it is now. So I would say the surveillance is necessary because it's best practice, and it also sort of covers us that some of the issues that were then asked by policymakers, we might then have answers up front.
Okay, but I think one of the key issues, yes, you're talking about the technical aspects in terms of integrity, in terms of surveillance, but so far the capital markets are prone to political pronouncements where you see the ZANU-PF, for instance, can just come up to attack the market. How are you going to deal with that? Because I think there's need for a different PR strategy on how to deal with certain political pronouncements.
Fair comment. So one of the aspects that I'm also trying to look at is internally for us as the commission. You'll find that we need to develop some sense of clout, so that we also get that market presence, that market respect as a regulator in our own sector. Because I also get a feeling that we are not there yet in terms of our presence, in terms of the respect that perhaps a regulator for capital markets should be commanding. And that has to be perhaps us looking at us internally. Do we have the capacity to regulate the market? Perhaps we could improve. Is our service as per expectation from our stakeholders? Perhaps we could improve. So those are some of the areas that I'm also going to look at. But specifically to deal with political issues that come into our market, I partly think is because there could be that element that perhaps the regulator is not at its level where it needs to be. And we can do a bit more as for us as a regulator in terms of engagement, in terms of training. Politicians by nature, you can't control them, but I think we have to influence, and that takes a regulator that has got some bit of clout, some bit of respect in the market, so that you also influence in your own way. And by influence, what do we mean? We have to demonstrate that we've got the capacity and the knowledge of the market, which is something that I think we could improve. If you look at entities that are leading in terms of, it could be seminars, webinars, it's the players themselves and not necessarily the regulator. And I think that's an area that we need to perhaps also move into. We should be organizing trainings, we should be learning ourselves in terms of new products that are coming to the market, so that the narrative is also coming from the exchange. At the moment, it's the players who are marketing their own products. And the politicians might say, these products have got these certain risks, because I don't think us as a regulator have done enough to actually also look at the products that are coming and perhaps giving them that PR that you're talking about. So I think it's an area which requires us to also internally focus and perhaps influence the market in a certain way. We won't stop the politicians from commenting, but I think we need to build ourselves and command some level of respect in the market.
So let's talk about development of the market itself. In spite of this draw that we are actually experiencing, how do you plan on developing the capital markets? And do you actually think we are in a space where we can say, oh, Zimbabwe's capital markets are fully developed?
Okay. So on that front, I think I'm actually very more optimistic. Why? If you look at, I think on the policy side as well, I think we've had policy pronouncements that also support development. I think the addition of the new product categories that also came very recently. We now have got private equity funds, we've got exchange traded funds, we've got rates, and these are policy pronouncements that are being made to support, I think, market development. We also have got the issue of the Offshore Financial Service Center, which is now in the Finance Act. And for me, those are pointers that even the policymakers want to see development in the market. What is the role of the regulator in that space? Our role is really to facilitate. The development aspect of it actually is the players that have to actually then come up with something that is concrete and ensure this development. But we have to play the facilitative role. And what are the tangible things that we could do? One of the things that I also found that was unfinished from a strategy perspective of the Commission, there was an attempt to create a capital markets master plan. I know documents can be documents, and sometimes they don't translate into tangible things. But I think a guideline of some sort provides cohesion in terms of focus. At the moment, is the players coming up with things that they think will work for them, but there's not that like a national or market cohesion in terms of direction. So I think perhaps we could focus on a master plan of some sort. I think even other industries, and the mining sector, for example, they've got a clear cut in terms of targets. Industry, they've got a clear cut in terms of policy on how to develop. And I think we need something like that. It might not really, but it helps us to focus our energies, because be it investment into infrastructure, for example, it should then be driven from that agreed national market, capital markets master plan to say, perhaps, so focus on development, for example. What are the key pillars that we need? We need clearing houses, we need A, B, C, D, and someone who is coming in the sector perhaps has got that focus already to say, I need to perhaps build my business around this area. Facilitation also means that issue of capacity as well. We have to be capacitated in terms of knowledge, because what also means that we have to move into areas that we are not in at the moment, and we have to develop our competencies in terms of those areas. So capacity-wise, something that we have to look at us as a commission, ensure that the staff is trained, we have got exposure to markets that are developed, so that when someone brings in a novel idea, we don't look at it with disdain, but perhaps we look at it from a point of knowledge. We have an appreciation of the risks that it brings, and we've got an appreciation of how can we fit it in our market. So the idea is to play a facilitative role, but perhaps strategically have something like a capital markets master plan that sort of focuses us in terms of the way forward.
Okay, so now let's talk more about internal sec issues. The issue of revenue growth is obviously in the spotlight. I mean, there have been issues by government itself, and they've raised it that SEC is a regulator, but then it depends heavily on fees from the issuers and fees from the markets. So how then can they be a fair regulator?
True question. In fact, we have been discussing that with my board, and we have been also looking at other regulators in the region, how they are funded. There are some that are completely self-dependent, like us at the moment, who rely on the market for sustenance. There are also some that are 100% reliant on government. Then there's a hybrid. In my own view, I think a hybrid model would perhaps best suit our environment, where we've got some bit of an allocation perhaps from government, so that we are not 100% dependent on what happens on the market. Because like now, when the market is down, and as a regulator, we are then expected as well to enforce regulation in a market which is down, you might then feel perhaps if it's going to dampen trading, you are then conflicted. So we need to manage that, and that way we would be proposing an allocation from Treasury, but we also have to be cognizant of the fact that we also don't need to overburden, I think, the national purse. In our view, the license aspect is not really related to daily trading, and I feel it's an area that we could perhaps do more. The quantum of our license fees, for example, in exchange, I think for this year, was paying something like 5,000 USD equivalent in local currency, which could be 1 month's salary for someone. And I feel it's really too low to sort of provide a buffer in terms of revenues for the commission. So it's an area that we're actually currently reviewing to see how can we also perhaps change on the license fees a bit, so that we cushion ourselves against the one that is now transaction based. So the two strategies: one is to approach government for a vote, and the second one is to review our license. There's also an element of services that we do that we are not currently charging for, like review of fee rules for exchanges. We don't charge for that, but what we are actually doing is like legal drafting work, which takes a lot of time for legal minds. Ideally, someone should have contracted someone who's got good technical capacity in terms of legal drafting, but they bring these things to us. We have to modify them into an SI, and we actually don't recover any cost on that. So those are the areas that we think we'll also be looking at, to say, can we also do like cost recovery on some of the services that we actually provide?
Okay, so do you actually think SEC has got the capacity as an organization? Are you happy with its capacity at the moment, or that's something that you would want to review?
No, I'm not happy at the moment, and I'm hoping I won't not getting into trouble with my board. But ideally, one is in terms of numbers. We are not adequately staffed at the moment. We could do more, especially in terms of our surveillance, supervision and surveillance team, in terms of our legal team, in terms of our ICT team. So this aspect of also us being able to facilitate means we have to also invest in ICT, perhaps smoothen the process. We are trying to automate, for example, license applications at the moment, so that we also do like modern, commissions where you don't have to submit documents and bags of papers. You want it to be done online. It's something that we're working on, but it means we have to invest in our ICT as well. Currently, we are working on a DR. We didn't have a DR, which talks to capacity. So it's something that we're also investing in. We need backup power, for example. Issues of, I think, utility challenges. We all know we need to invest in that. The manpower I've already talked about. We actually need resources in the legal drafting side, so that there's quick turnaround time for someone who is applying, who needs their documents to be checked. They also want it to be done timelessly. So I think we could improve in terms of our own capacity, human resources wise.
Okay, so in terms of new products, do you want to just highlight what you would think would be the best product that you would want introduced in the market, or any new exchanges? We've seen the ATP, we've seen that hasn't really taken off quite well. Are there any new products that are in the offing?
Yes, I think at the moment the most exciting one for us will be the REITs. The statutory provisions are there.
But they can't be launched now, obviously.
Yes. The timing is a bit off at the moment, but it's something that we think would fundamentally change our market, particularly even for pension funds. If you look at the issues of liquidity, which the pension funds I think are grappling with at the moment, and also how they are heavily invested in real estate, for example, it's something that helps even the issues of loss of value by the contributors. So when you work and you retire and your money might have partly been used to buy a building, but when you go out, you actually just get a paycheck which perhaps saves you for 1 month, but the building remains. And we think if these properties can be securitized, can be unitized, someone can go out with units.
So how many have been licensed so far?
I'll have to admit that I haven't checked on the number, but off the top of my head, I know that 3 that were licensed when I was still on the other side.
Okay.
I'm not sure if there's more, but I know there are 3 that had been licensed, and we're at various stages of applying to the various exchanges for listing. But not only that, it's also, if you look at the representation of real estate on our capital markets, so you've got companies in various sectors, and we pride ourselves in saying the capital markets are well represented. We have got industry, we've got insurance, we've got banking that are listed, but the representation of real estate has actually been falling. With the delisting of Dawn, with the delisting of ZPI, and that was to us a loss in terms of that real asset class. So we think it would also make sense to bring back that asset class in through rates. There's also commodity exchanges now, and we think the other area that we should be looking at, or that we think there will be growth, is your derivatives now, your futures, because these work well where there is commodity trading. I think probably at the moment it's mostly spot, but for it to be really exciting, you then need to introduce the security side of it, which is the futures. Those ones will help to actually deepen the market, because the infrastructure changes. You now need a clearing house, you need clearing participants, and that changes the landscape a bit as well. Even in terms of hedging instruments, I think it does a bit more in terms of
But doesn't it all come back to what you said in terms of capacity and then just the general lack of depth in the market?
Agreed. We will have to do some bit of work, but I think something that we also pride ourselves to say, as a market, we are really, in terms of perhaps knowledge and appreciation of these products, we are not really far off compared to the other markets. In the region, I think we're only second to South Africa, which is way ahead of us. But we try to look at comparable markets like Kenya, for example, where they've also introduced these things. Nigeria is the biggest economy, but in terms of exchanges, they actually introduced the exchange much later than our country. And we have got, I think, a sophisticated ecosystem in Zimbabwe. We've got properly structured pension funds, properly structured asset managers, properly structured financial advisors. What we could miss in perhaps is investment bankers. But we think even the skills that we have, I think we've got people that have had exposure at World Bank level, international markets, that have also come back in the country. And I think for us, that's good starting ground. It might not, but we have to start somewhere. And I think in short, we need to start somewhere. We might not have to wait for an ideal environment. We need to start somewhere. And I think now, because there's talk of commodities exchanges, it's a good time to start looking at those areas.
And then in terms of exchanges, because I think that will also help broaden your view and broaden your fees as well.
Definitely. But we also have got a mandate to ensure that we don't introduce systemic risk in terms of the players that we then are licensed to play in the field. So like you rightly said, the examples that you gave, that perhaps there are some players that have not grown. The question might then be, is that an indication that perhaps there's saturation now in the market in terms of the exchange space? Perhaps not, but we are open enough to receive business plans from those that think they could be scope, that may be seeing a different angle from the players that are there. And if the business plans are convincing enough, like we said, our role is really to facilitate, but obviously we have to look at whether there's an element of systemic risk that we are introducing that we want to guard against.
So let's talk about investor education now. So obviously the market needs to attract new money. We've seen foreign investors are taking flight.
Yeah.
Pension funds are reducing their exposure also because of their own regulatory environment.
Yes.
How does SEC intend to play that role in terms of drawing new money into the market?
Yeah, that one is a difficult one. I think of all the players that you can convince, the investor is always the difficult one to convince to part with their money. But if you look at our objectives, part of the market integrity also says and investor confidence. So it's a joint, I think when it was crafted, I think it was speaking to say if you perhaps deal with the market integrity, there's an element of investor confidence. I think we have to do what we need to do to convince, like foreign investors, I think they have really just said we just continue to watch the moment. The good thing is I think we still receive those that represent foreign investors, the global custodians, for example, still come through to the market. They also come to the commission when they are acquiring their annual due diligence. And through the exchanges that we have, you feel that they still like the market is probably the just clarity in terms of certainty which they are looking for. And that goes back to us perhaps advocating internally with our policymakers for a bit of certainty to comfort our foreign investors. I think a lot has also been done to sort of cudgel the local investors. We also need to be self-sufficient. The foreigners will take time, obviously, but we need, if we have strong local support, and I think institutional investors like pension funds have always been our bedrock. We started working, I think, on creating the retail front, which I think still is an easy target to work on, but those ones are also fickle. When the market is really depressed like this,
they stay away.
They stay away. But perhaps investor education, like you said, it's an element that helps to help them. We still need to sell the idea that stock market is also a long-term play. We are now, I think, very short-term in our perspective as a nation because of other things. But I think we still need to sell that idea that stock market investment perhaps is a long-term play. There's no need to panic. But more importantly, I think, is to also look at the fundamentals. Because markets do have cycles everywhere. Even I think globally at the moment, I think we are not unique. I think even the bigger markets are like in our situation. So I think it's to look at, give proper analysis to say, is this likely to be temporal? Is it likely to be sustained? Is the economy fundamentals pointing to a recession? That could be perhaps speaking to the momentary downturn that you are facing. But convincing investors, like I said, it's a fine art. You do what you can, but at the end of the day, I think the investor has to make it. But I would say perhaps engagement, perhaps in short, both foreign and local, and some element of training to just ensure that they don't over panic.
Okay, so just to close off, we want to know your vision. You're new on the job, so obviously you've had some time to look at what you want to achieve. So what is your vision? Perhaps you have a 5-point plan, like we are used to in this country.
I have a 3-1. Three
Okay.
points, and it's a repetition of what I've been saying. So first of all, is to build a strong SEC. Really have a Securities Commission which is a proper regulator, a respected regulator. We need that in this market. Second one is obviously the market integrity and investor confidence. And this will come in various formats. Oversight has to be on point. The conduct of our participants has to be on site as well. So I'll be focusing on that market integrity, which will ultimately think can help us in terms of investor confidence. Third element is the market development, which I highlighted earlier, that we need something that is probably more cohesive, more organized, that gives us a focus as a market. The Securities Act talks of 6 objectives, but I think for me, I only have got a 5-year term. If I focus on building SEC, that is a proper regulator that is well respected, a regulator which is facilitating market development, and a regulator which enforces market discipline, market integrity, and delivers on investor confidence. I think for me, those are the areas that I want to focus on.
Oh, thank you. We will hold you to account on these 3 areas, which is why we asked about them. And when he fails, we will come back again to say, look, you're failing on this.
All right.
But thank you for joining us, and thank you for having this sit down with us.
No, thanks, Happiness. It has been a pleasure, and thanks for coming as well. We appreciate it.